Hello, traders. Welcome back to another weekend edition of the market analysis. We had another bullish end to the week. Markets, as you can see, ended quite nicely above the zone we had talked about last weekend, as being a potential short coming into this week. So here was Friday, and I had this. I had this sort of blueprint here, right? Sell the rip. But I had also mentioned we needed to watch this trend line coming up and see if that was broken early in the week. We could see some upside, and we should look to sell the rip at this level. And then, I gave this buy the dip zone, which we never ended up hitting. We just kind of came down to the I'm important line. And the reason that has been so important is because above has usually seen upside, and getting back below, you see that it struggles to get back above here, and often can see some downside, and it usually has to gap over to actually get through that number. You can see most of the times it gets above, it's actually through a gap. So that was kind of where I wanted to watch, could the market get through, and it happened to line up very nicely with the trend line, and so we held. And I was a buyer down here. I wanted to see, could we start making higher highs out of that support? And so we did, and that's why I had this marked here, because this was kind of our last lower high that we made. And we ended up closing the day above that, and I figured, hey, that's pretty bullish for the short term. And sure enough, we get this gap up, and I was selling. I was selling into this, and I was selling here, and I took some profits. And this day here, I was expecting more downside. I know that anything can happen, of course, but my gut kind of said, hey, there's probably more downside coming. I was looking really for a retest of this low or possibly lower. And, this is what really kind of started to tell me that something else might be going on. And the reason for that is simply because you have this range right here for the entirety of the day on Wednesday, this was. And so let's say you have this range, right? Let's call it something like that. And you have this range, and you think about how people are positioned in here. You have shorts all in this part of the range, and you have buyers in this part of the range. Excuse me. And when the market gaps above that entire range, you now have all these sellers that are kind of underwater. And as they get squeezed up here, right, they're going to be getting out of their positions. And basically, as long as the market cannot recapture where those shorts were positioned for the entire day, then that can be used as support. And if they're buying, I knew coming into this day, if they were buying the 287 area, that we could stay bullish. And so what this did here, we created a new high. And we actually, it was a bit of a false break. We came back down. And at the end of the day here, I said, hey, if we're holding here, I'll bet money we gap up. I did not trade it because I'm not much of a gambling man here, but I was definitely long on this day. But I figured we'd probably get a gap up, and that's what we did. And this here, this Friday, is the importance of why we mark our gaps. So this was our gap. It was an open gap, not filled yet from this gap down. And what happened here is you have all these shorts positioned up here, and you gap above that gap. And so immediately in our trading room, we said this morning that we should be buying all dips. Buying all dips. We bought dips on the S&P. I'll just, we had dips on TTD. I mean, look at some of these trades. Look at some of these trades. Look at that. Look at Roku. That was one hell of a dip buy. Look at Twilio. I mean, that one was just incredible. I mean, Disney we did not take, but that one was, I mean, just look at how well these trades worked. And all you have to know is that the market's gapping above that gap. It's gapping above the sell the rip zone. It's gapping above this gap. And you have shorts positioned right here. So it's all a recipe for a nice up day. And you can almost guarantee that buying the dip on a good buy the dip setup, something with a good support level that it's coming into, a good breakout area it's coming into, it's been bullish, whatever, find a good buy the dip setup. I have videos on that if you need to look, but it's if you didn't make money Friday, you should really think about watching that video, even joining us in the room, because I mean, this was like the easiest money I've seen in a long time throughout this whole period of price action that's been pretty difficult to trade. This was one of the easiest days I've seen. So what am I expecting now? What am I expecting? Well, let's go just to kind of a simple big picture. Simple big picture. This is the first week. We're going to start with a weekly. This is the first week that we've closed above kind of this pivotal zone from the way down. So I can't look at that as anything but bullish. This was really our only pivotal zone, along with maybe this one here. This was kind of a pivotal zone. When we closed above this, I said, hey, this is bullish. Yeah, we can pull back, but this is probably going to be support now. You can just see all the wicks struggling to get through the zone, and here's a breakup candle. So that's bullish. We didn't even retrace whatsoever down to that. And so we're in the same kind of situation right now, but it's a little bit different because we have, I'd say, we still have resistance. Just like we did here, we had resistance at this zone. That proved to be true. Well, yeah, we broke that zone, so we can look for this to be support now. This 285 to 290 zone is that support early next week. That's very probable. But we have to keep in mind that we have two pretty big levels here. We have the open gap from this gap down, and that is actually a breakdown area, right? You gapped from here to here, breaking this support. And we know markets like to test breakdown areas and then reject them often. So I'm really watching both this gap at 297.50 and then at 302 just above, maybe on an overshoot. You have the big number of 300, and then you have 302, which has proven to be pretty tough. Two major pivots on the S&P, and then a gap over before we run. So that's kind of the zone, and then we've got a bit of a rising channel here kind of forming. So can we come up and do something like this, and can it take another 2 or 3 weeks to top? Absolutely it can. We're going to go into some other markets and see why we didn't break down. We knew that there weren't any technical breakdowns yet. There weren't really any technical breakdowns, and we were watching some numbers on certain charts. The XLF is probably the best example because I wanted to watch this closely because of this double top. And here comes Monday, holding these lows, and we were watching this blue, purple number right here. Why? Because that was the closing low. That's the neckline for your double top. 21.25. Look at this day here. I wasn't sure, right? I thought maybe we get a gap under, right? Nobody knows. But when I saw this actually gap up and start out the day rallying, I said, hey, something's looking different here. And that's why we look at these numbers, these clues, Okay, the XLF has double topped. It's got a neckline. Nothing's confirmed until we're breaking that neckline. On this day, we gap up and start rallying, and I said, hey, something's up here. And looking at other stuff, you have to be looking at that in the middle of the week, and you have to be analyzing these kind of things, or you're just going to get screwed. You're not, if you just look at the S&P and say, hey, I think it's going to go down because this and this and this, and jobs are, unemployment numbers are crazy high, and I just think it's going to crash and burn. Well, guess what? It might crash and burn, but it might take 2 months to do that. So if you are a trader or even a swing trader, you should be not having such a bias and checking your bias at the door, looking for these key things here that can be huge signals that you can get another down move. And when they don't happen and you gap up and start rallying for the first 30 minutes and you're up here, say, hey, maybe the market's doing something else. And that's what we did, and we capitalized on it. And that's you have to be non-biased like that. So the XLF, no reason it can't keep going in this range for a while. It's absolutely incredibly weak compared to the other markets, and that's something to note. If the XLF does not really get a move on, if it can't get over these highs, it's really weak, guys, and the market can't go anywhere without the financials, and they're really the backbone of the market, and it's not good. Like, I'm going to keep repeating this because it's going to keep being true. The XLF, the IWM, these are market leading indices. The DJT, this one can often give a future picture of what the market is going to do. Right now, guys, it's still making higher lows, still making higher highs. The question for the DJT is do they try to put in, right? We can see a lot of these markets are kind of starting to roll over. The question I want to look at for this week is, do markets like the DJT and markets like the XLF and maybe the IWM, do they make new highs with the S&P? You see the S&P is right at its new highs. The XLF, IWM, DJT, they're not really that close to their highs. So does the SPY start making new highs and come up here while the DJT, the XLF, while they're actually not making new highs? That's going to be an early sign, if that starts to happen, that this market's going to roll over and see a more meaningful pullback. Maybe you're coming down into this zone, to these lows, something like that, and then you see where we go from there. But that's what I'm watching for this week. Do these indices make higher highs? Are they leading a charge if we get more upside? Or are they lagging? Are they starting to make lower highs while the S&P is making higher highs? That's going to be the tell for the week, a week or two that's coming. Okay. Finally, the SMH. This one, I've been taking all these trend lines off. I think they're not there to create a bias, and they're the fact of the matter is they've kind of just stopped working, right? And that's what happens with trend lines a lot of times. You'll try to paint a picture, some bearish picture, and guess what? They'll just keep slicing through the trend lines. So price is always the most important. I always say that. And so why not just look at price here? Well, the SMH, hell of a comeback, right? We had 2 pretty big down days, and this week was just up, sold into, up, sold into, up, sold into, and finally kind of bought. But, we're not any farther than we were the week before. We still have this pretty key area here. But, as long as we're holding this, there's nothing wrong with the SMH. This was kind of a key zone in here. We resisted it on the first try. We have a breakup, hold. It's holding. As long as we're holding here, this thing can kind of flag right here and go higher. There's no reason that can't happen. And you look at a lot of these charts and you'll start to see the same thing, that we're kind of just moving sideways and sideways, and now we're starting to rise a bit here where maybe we can get a more meaningful pullback. But in here, one thing I want to note, when you get an up candle and you're kind of moving sideways and then you get a rejection candle, typically you're not going to get follow through right away. Typically. Because this is showing that price is being accepted at this price. You're kind of staying up here, and then you make a little peak above and you reject, but you haven't gone anywhere. You're still sideways on the close. So this is not a rejection, and all those smaller time frames looked like, okay, there's some short setup, and there was a couple nice short trades. This is really still bullish. And I think this is the next area where a bearish play can come into the views. I think this area, along with possible diverging markets this week, can be the tell for another nice short trade. But I wouldn't get overly short biased. Again, I'm never too biased, because the trend is up. And the trend can go up and up and up longer than anyone thinks. I'm not saying that's going to happen, but you have to always remember that and be quick to take profits when you have them in this kind of a chop market. And if one time you catch that runner and you're able to let some of your profits roll out, then that's wonderful. But hey, long story short, guys, this zone is the key support zone for next week. If that's broken and this channel is broken, we have trouble. We have maybe a little mini head and shoulders here. That's our neckline, and that gets broken along with this zone. Trouble, trouble, trouble. We can come down. We can come down. I would expect a retest of this low here at 272, 271. Obviously, you have other lows in between that you might want to worry about. But this is, I think, the most major low right here past this zone. I think it's around 270, 271, 272. And potentially, obviously, you have this 260 pivot here that could come into play. I think this caps our upside on the week this week. 302 would be the highest I would expect the market to be this week. Maybe a small, tiny overshoot. I wouldn't expect any higher than that. I expect us really to keep grinding along, and there's always potential for a sell, but it's not really expected this week from me. I really expect more of a continued grind in this channel, and maybe some divergences in the other markets start to form that can give us a better sell signal in the coming weeks. Okay, that's going to be it. Hope this helps. Hopefully you can make some decent trades off of just this simple picture here. Please like it, sub, share, all that good jazz. And I'll see you guys in the next one. Peace.